Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Hidayati and today my team will be presenting our project for FIN 452. For this project, we have chosen two companies which is Coca-Cola and Pepsi as the focus of our study in trend and cross-sectional analysis. Let me introduce the team members for this project. The first member is Saidatul Atikah binti Masri with student ID 2024856724. Next, we have Mastura binti Yahya with student ID 2024863638 and myself Nur Hidayati binti Razali with student ID 2024423862. Now, let me go to the overview of this project. First, we will discussing about the company of Coca-Cola and followed by company of Pepsi. Next, we will look at the cross-sectional analysis of both company. And then we will discuss about the conclusion and finally we will wrap with the recommendation of the best company. Let's start with Saidatul Atikah who will be presenting about liquidity ratio of Coca-Cola.
Here is the trend analysis for liquidity ratio of the company Coca-Cola. The current ratio and quick ratio move in tandem over a period of 5 years. As seen in the liquidity ratio reading in this graph, Coca-Cola faced a difficult year in 2019 as both ratio, current ratio and quick ratio is below 1. Coca-Cola has a low cash position as shown in the graph, and over the past 5 years, the quick ratio of Coca-Cola never exceeded 1, while the current ratio for Coca-Cola increased in 2020 with holding in inventory and account receivable. However, with the ratio that Coca-Cola has achieved over the past 5 years, it shows that the company was facing difficulty in settling short-term liabilities.
Based on table and graph above, it shows that the inventory turnover and total asset turnover ratios have been analyzed in Coca-Cola Company. The interpretation inventory turnover for this company in year 2019 show a good performance which is 4.76 compared to year 2020. This is indicating that this company efficient in using the total asset to generate sales. Besides that, in year 2021 and 2022, the amount increased back from 4.60 to 4.71, and this is show that the company is selling the product in a timely manner. However, in year 2023, the amount suddenly dropped. That caused the inventory turnover become decreased to 4.28, and that shows the company could indicate overstocking or having extra too much inventory in their stock. Total asset turnover in year 2019 is better, which is 3.91 compared to after 3 years. However, in year 2021, it showed that the amount increased from 3.74 to 4.35 in year 2022 and continue show a good performance in year 2023, which is 4.80. And it showed that this company is efficient in generating sales from the available fixed asset.
I will explain about Coca-Cola's leverage ratio over the past 5 years, focusing on debt ratio and debt to equity ratio. From the chart, Coca-Cola debt ratio started at 4.55 in 2019, its highest level in the 5 years. Since then, the ratio has steadily decreased, reaching 3.77 in 2023, indicating reduced reliance on debt. This downward trend suggests improved debt management and reduced risk of financial distress. Next is debt to equity ratio. It is peaked at 2.08 in 2020, reflecting higher dependence on debt financing that year. However, Coca-Cola effectively reduced its DER to 1.37 by 2023, indicating a stronger financial position and increased equity compared to debt. From the analysis, Coca-Cola decreasing debt ratio and debt to equity ratio over the 5 year demonstrates significant improvement in financial stability. Now, I will explain about profitability ratio for Coca-Cola. Profitability ratio focuses on operating profit margin and net profit margin. Operating profit margin is to measure operating profit as a percentage of revenue, indicating efficiency in core operation. And net profit margin is to measure net profit as a percentage of revenue, reflecting overall profitability after all expenses. Starting with the operating profit margin, we can see that Coca-Cola's OPM increased from 27.56% in 2019 to a peak of 29.46% in 2020, highlighting improved operational efficiency during that year. However, it slightly declined afterward, stabilizing at 28.59% in 2023, which is still a strong indicator for operational profitability. Next is the net profit margin. NPM shows a different trend. While it started at 23.94% in 2019, it decreased to 22.19% in 2022 before recovering slightly to 23.42% in 2023. This fluctuation could indicate varying external factors like cost pressures, tax changes, or shift in overall net income.
Next is company of Pepsi. The trend analysis for liquidity ratio of Pepsi. For the previous 5 years, Pepsi has maintained an unfavorable liquidity ratio. The current ratio and quick ratio are both less than 1. The company capacity to resolve short-term debt were exceedingly challenging due to its inadequate inventory and cash position. It showed the company unable to settle the current liabilities due to the shortage of liquid asset it possesses.
We start with Pepsi Company. Inventory turnover for this company in year 2019 show a good performance, which is 9.32 compared to year 2020. This is indicating that this company efficient in using the total asset to generate sales. Beside that, in year 2021 and 2022, this company is still not improving from 8.70 to 8.48. That caused inventory turnover become more decreased. However, in 2023, the company is still not improving. That caused inventory turnover shows extremely decreased to 7.94. And that shows the company could indicate overstocking or having extra too much inventory in their stock. For total asset turnover for Pepsi company, total asset turnover in year 2019 is better, which is 3.49. It shows that this company is efficient in generating sales from the available fixed asset. However, in year 2020, it showed that the amount increased from 3.21 to 3.38 in year 2022. From the table in year 2023, which is 3.23, showed the poor performance of this company. This is because the company does not use the available fixed asset to gain more profit.
Now I will explain about debt ratio trend for Pepsi. Debt ratio peaked in 2020 at 6.91, followed by a decline in subsequent years. The DR remained relatively stable between 2022 at 5.38 and 2023 at 5.43. Next is debt to equity ratio. The DER also peaked in 2020 at 3.00, then decreased consistently from 2021 to 2023. The DER reached its lowest point in 2023 at 2.03. Both DR and DER indicate a reduction in leverage after 2020, showing Pepsi's effort to manage its debt level more effectively. Next is profitability ratio for Pepsi. The first one is operating profit margin trend. OPM declined steadily from 2019, which is 15.32%, to 2022, 13.15%. A slight recovery occurred in 2023 with OPM rising to 14.12%. The second one is net profit margin (NPM) trend. NPM saw a consistent decline from 2019, which is 10.89%, to 2021, 9.59%. There was an increase in 2022, 10.31%, but a slight drop again in 2023, 9.92%. OPM remained higher than NPM throughout the period, indicating operational efficiency but possible challenging in managing net profitability.
Now, we will look at the cross-sectional analysis for Pepsi versus Coca-Cola. Cross-sectional analysis for liquidity ratio of Coca-Cola and Pepsi. In comparison to Pepsi, Coca-Cola maintained a greater quantity of liquid asset, including cash, inventory, and account receivable. Coca-Cola liquidity ratio shows the company has better coverage of outstanding debt, and Coca-Cola capacity to resolve short-term debt is superior to Pepsi in 1 year time.
Based on the table and graph above, it showed that the operating profit margin for Pepsi company in 2023 seems to continuously increase. It showed that they are better in inventory management for this year. Furthermore, both companies will remain solid in their financial performance. But Coca-Cola company is leading in profitability margin and liquidity, while Pepsi company has fast near-term growth and better.
In cross-sectional analysis, based on the table shows, debt ratio for Pepsi is 5.43 and debt ratio for Coca-Cola is 3.77. We can see that Pepsi has the higher ratio of debt that make the company has the higher risk in its financial structure. Debt to equity ratio for Pepsi is 2.03 and Coca-Cola is 1.37. The company that has the better DER is Coca-Cola because they relies more on equity provided by the owner, which is the best decision rather than relies on the amount of debt.
Cross-sectional analysis for profitability ratio of Coca-Cola and Pepsi. This ratio measures net profit margin and return on shareholder equity of companies. Coca-Cola has achieved an excellent operating profit margin. Coca-Cola were able to generate large sum of profit, which the sale performance better than Pepsi. Coca-Cola success converting revenue to profit and return shareholder equity.
In conclusion, Coca-Cola is financially stronger and more efficient than Pepsi. It is because Pepsi has higher sales but less efficient asset use. From the analysis, Coca-Cola has lower debt and better profitability. This is because Coca-Cola is more reliable for investor and creditor. Company Pepsi also should work on strategies to improve its profit margin, unlike Coca-Cola, which already has either profitability ratio. Coca-Cola and Pepsi should improve liquidity by managing spending, selling unused assets, and converting short-term debt to long-term debt. Thank you for your attention, and we hope that this presentation has provided meaningful insight.